Good evening, ladies and gentlemen. I hope that you will forgive me for addressing you in English. I'm going to spend very little time just giving you a flavour of what is happening in England in relation to Swiss franc loans. I am a barrister, that means a self-employed advocate, working in the commercial court, where there are at the moment over 100 cases concerning Swiss franc lending. The leading cases conducted by Dr. Alexander's firm concern loans provided by Cypriot banks for the purchase of off-plan properties in Cyprus. And so the key distinction between the English experience and the experience that we will be hearing about from our friends from other countries in Europe is that the lending in England was from banks outside England, so Cypriot banks to UK citizens, not UK banks. As far as I'm aware, there is no lending in Swiss francs in the United Kingdom by UK banks at all. All lending is normally in sterling. So the critical distinction between what happens in England and what happens elsewhere is that you are dealing with UK citizens taking out loans from foreign banks, in this case Cypriot banks. Now, I said that the loans concerned the purchase of off-plan properties in Cyprus. Many of you will be familiar with the enormous construction boom in the first decade of this century, and particularly around Paphos, around Larnaca, Famagusta, other areas. What happened was that developers wanted UK citizens to buy their properties. And they developed a model where you could buy the property for minimal cash, but with a loan attached to it. The whole purpose was to keep your cash outlay low. You had your loan to pay for the rest of the purchase price. That would then fund the construction. And when the property was finished, you would be able to sell it or let it. And the proceeds of the sale would pay off the loan, or the proceeds of the rent would enable you to meet the mortgage payments. So the investments or the purchases that the UK citizens got into were supposed to be self-funding. And the loan was part of the package. That is what the purchasers say. They would not have proceeded to buy an off-plan property if they had not been offered a loan. And the loan came from a Cypriot bank. And what one finds is that in particular developments, you have obviously one developer, and you then have one bank that does all the lending on that development. And so when people are discussing making a purchase, the product, the loan product of one bank is presented to them. Now, in the leading case in England, which is conducted by Dr. Alexander's firm, is called Alpha Panaretti. And Alpha Panaretti is the name of a developer in the Paphos area, which obtained funding from Alpha Bank, and Alpha Bank made loans to the purchasers of properties. As you know, there is no connection between Alpha Panaretti and Alpha Bank. What did though happen was that who would the developer use to sell these properties to UK citizens? The answer was a network of agents recruited in the United Kingdom, brought out to Cyprus and trained to sell the properties. And the claimants, those who purchased the properties, say that they were also selling the loans. It's fair to note that that is disputed by the bank, but of course it is also clear that one bank did all the lending. So those agents from the United Kingdom came to Cyprus, attended training sessions, met the developer, met various Cypriot solicitors who were supposed to assist, met the bank, and then they went back to England and spoke to their clients and persuaded them to enter into these purchases. After that, the bank paid large sums of money to the developer. Those were used partly to build and to pay the construction costs. But at the end of the day, the purchasers are not happy about the state of the properties. Some of the developments are building sites. All of them are in various states of disrepair. That's what's happened to the properties. What's happened to the loan is that, of course, all the loans were in Swiss francs, and the Swiss franc has increased in value against sterling by up to 60% since 2007. So on the Swiss franc aspect itself, the loans have become unaffordable. All the loan agreements contain variable interest rates. So the interest rates in the loan agreements can be changed by the bank. And the bank, in common with lots of other banks with these sorts of loans, has put up the interest rates. And that's another reason why the loans have become unaffordable. And so the clients are dissatisfied with their properties and very dissatisfied with their loans. And so they issued proceedings in the High Court in England against the developer and against the bank. Now, I've been talking about this in relation to Alpha Panaretti and the lending of Alpha Bank, but it is fair to point out that there are lots of other cases concerning other developers and other banks, all from Cyprus, all using Swiss franc loans as part of a purchase package for off-plan properties. Now, I think that some of the other speakers will talk about the types of action that you can bring in your national court. It's worth noting that in England, we don't have any such thing as a class action. But what we do have is the ability, if you have people with the same interest and the same sorts of rights, we have the ability to issue a claim that names numerous claimants. And that is what has happened in the Alpha Panaretti case and in some other cases. So you have our existing mechanism being used by lots and lots of people to bring claims that are factually very similar. What do the claimants want? They ask for the cancellation of the sale contract and the cancellation of the loan agreement. They also ask for damages for misrepresentation, and they also ask for damages for breach of contract. Now, it won't surprise you to learn that the bank and the developer vigorously deny all the allegations and defend them. But the first argument in these particular cases is about where the claims should be tried. Because they concern business in Cyprus, purchases in Cyprus, loans by a Cypriot bank, should they be tried in England or should they be tried in Cyprus? And that is an argument over jurisdiction. Which court has jurisdiction to try those claims? Now, concentrating for a moment on the loan, all the loan agreements contain clauses saying that the courts of Cyprus have the exclusive right to hear any disputes concerning the loan. So on the face of the loan contract, everything has to go to Cyprus. But there is a European regulation, Regulation 44 of 2001, which provides that if you are dealing as a consumer, you are not bound by that sort of jurisdiction clause. And that is an argument that the claimants have used to bring their claims in England. In order to be a consumer, you have to show that you are engaged in a private transaction. It's not for your trade or business, it is a private transaction, your own private purposes. You then have to show that the person you are suing, in this case the bank or the developer, directed their activities to your country. So you have to show that the person you are suing directed their activities to your country. And the third thing you have to show is that your contract falls within the scope of those activities. I think we're going to hear quite a lot tonight about consumer issues. In the English litigation, the consumer focus is primarily about jurisdiction. Which country has the right to hear a claim? And it's also about arguments that certain terms of the loan agreement, or indeed in the sale contract, are unfair because they represent an imbalance in the rights between The purchaser, a private individual, and the bank or the developer, a commercial business. So the importance of the consumer issue in England, as I've said, is jurisdiction on the one hand, and then unfairness arguments about specific terms in the contracts on the other hand. Now, of course, no foreign defendant wishes to be sued in courts outside its own state, so jurisdiction is very controversial. There are, in the Alpha Panaretti litigation alone, 450 claimants. There must be at least 2,000 other UK citizens who have filed claims in England, probably more than that. Given that the first big contest in the English litigation is jurisdiction, I should say that the claimants established jurisdiction against the developer. That decision is a very impressive judgment on lots of matters relating to jurisdiction, consumer status, property rights, and so on, and that is under appeal. So the claimants won at first instance, and there is an appeal. There is also a dispute with Alpha Bank about jurisdiction, and that was due to be heard in June. That case at the moment is frozen until the end of January. Many of the issues are the same, but of course when you're dealing with jurisdiction you have to look at the facts of the particular dealings. In what respect did the bank direct its activities to the UK so that the people who entered into the loan agreements can say that they were consumers and can sue in England. I look forward to hearing what Mr. Kasler has to tell us, because his case has provoked a lot of interest in England, because it is an example of somebody complaining about Swiss franc lending and using consumer status to ask the court to strike out certain terms in the loan agreement. That is a very powerful situation, and it is one that English lawyers are looking at very carefully. Professor Emilianides referred at some length to the circular of the Central Bank of Cyprus dated the 11th of October 2006 and explained its effect and the controversy over what it actually amounts to. I think that it would be very interesting for me to hear from Cypriot members of the audience and lawyers about what they think that circular amounts to. If you look at it, it requires people, it says, the banks must advise without fail. It tells the banks what they've got to advise on. It makes clear that they've got to get the borrowers to sign a statement that they know and understand the risks. All of it looks like being done for the benefit of the borrower. And also, of course, for the benefit of the bank, that the bank doesn't get saddled with lots of customers that say, you didn't explain it to me properly. What is the nature and effect of that document? Does it establish a duty itself? Or does it merely show that if it's not complied with, because of the dealings between the bank and the borrower, the bank has broken the duty? That would probably be the position in English law. In English law, regulations issued by our banking authorities do not themselves impose or establish new forms of action for the customer. But what they can do is flesh out an existing duty that the bank owes to the customer, so that if they don't comply with a particular regulation, the customer can say, your non-compliance with that specific requirement demonstrates that you are in breach of duty to me. They are therefore evidence, if they're not complied with, evidence of breaches of duty. So I think it's important to have a debate in Cyprus about that document and perhaps others that are similar. Of course, what we see in the English courts is the banks saying, well, it's all very well, you're subject to the loan, you can't afford it, but it was your own risk. Essentially, you came to us as an applicant for borrowing and we had no duty to tell you anything at all about the risks. That was your own affair. That is what the banks say in England. I have heard from some of our colleagues who will be speaking in a few moments that in certain jurisdictions, the banks understood the risks and embarked on a course of lending that they knew would become more expensive for the borrowers, and which then was going to be a source of big profits for them. That is commercially understandable, but perhaps morally extremely difficult. And I don't know whether other members of the audience think that banks in this country and in others that they know about have pursued a deliberate policy of lending in Swiss francs in order to get as much money for themselves as they possibly can. That's not something that has really been debated in England, but it's a very interesting question that arose from discussions with some of our colleagues from other countries yesterday. But of course, it all boils down to what were the banks there to do. Did they have an advisory duty, or were they just there to provide finance if their customers met the criteria? That's a big factual argument. And in these cases, what often matters is the facts, quite as much as the legal principles. One has to work out what was the position of the borrower, what was the purpose of their loan, what are the features of the loan